Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report for September 6th, 2016. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily chart of the ES right now. And what you'll notice is that price continues to trade within this larger trading range here. This range has been developing here for the last couple of months. And now that we have Labor Day out of the way here, we could begin to see some more volatility and volume progressively come online as we fill out the rest of September. But right now, we're still in the range. It's still not a whole lot to do at the moment. I think some of the key levels to watch, 2185, every time price gets to or just above that level, you usually see this thing rotate back down. Another key level to watch is 2179, which is the previous week's close price. Right now, that's going to be the earliest key level to watch for early directional bias. If we take a look at the intraday time frame, here it is. That's the previous week's close, 2179s, and you can see how price had a little bit above it, then the stops came out, now they came back above it and they're holding. So that's going to be an important early key level to watch. Again, if this thing does rally into 2185s, 2186s, watch for signs of a failure above those levels, because that could easily lead to another rotation back toward 2172, perhaps even lower. All right, let's take a look here at crude oil. Here's crude. Crude oil has had a significant reversal and sell-off here this morning already. If we take a look at the higher time frame with the weekly pivots here, something you'll notice is a large tail that's developed already this morning. And that tail, let's take off this key range here to offer a little more detail. Look at this right here. This is the previous low right there. That's where the stops came out. They sealed them off here, and right there, this is what happened here pre-market already. We came into there, rejected off those 4650s, and have already rotated back down. So that's a big time rejection from below. That could fuel the next wave of weakness back toward 40. So this is going to be very important to see how price progresses from here, but inability to reestablish acceptance back above 45s could be very telling, and we could be looking at a move into 42 and perhaps as low as 40.15. All right, let's take a look at the intraday time frame. Here's the intraday time frame again. What we were looking for is how significantly that rejection occurred up top, up here. And that's right at that key level. That's at 45.60. That is also the composite VPOC over the last year. So for price to go offer through it, come back, retest value from below, and go significantly offered is something to keep in mind, because this could fuel the next wave downward. You can also see here's 45s. That's where price kind of coiled up, boom, boom, boom. And then right here, boom, big expansion to the downside. So 45s, very, very important. I think right now it's going to be sell the rips until proven otherwise short term, as this thing perhaps heads into 42s this week. So we'll keep an eye on this one. But again, 45 is going to be that key level to watch. All right, let's take a look now at gold futures. Here's gold. We'll bring this out to a higher time frame first. Now, gold has been very, very bullish here off of our key area of support, and that's something that we were looking for late last week. We were looking for a push into 1306 to 1310. I mentioned, this looked like a fake absorption signature here, and to better wait till 1306 is hit. We saw price come into that zone for 3 days, and then on the third day, major push off that zone, and now we've seen a rally from basically 1306 to 1336, and now we're holding up here at highs. So this is very significant here. You can see price is starting to test the upper end of the impulse range from Friday's market. I would say that right now pullbacks are buying opportunities short term, and this already has begun its 30, 60 candle rally here. We've already gone 30 of those handles. We got probably another 30 more to go into about 1360 or beyond. So this could be very, very important over the next week. I say pullbacks are to be bought at least short term. So right now, if we take a look at the intraday time frame, again, the reason why we like that 1306 so much was because it had a major LVN in that zone. It was the top of a previous key range. There was a lot to like in that area. It was already defended before. And this is exactly when we knew things were starting to get hot and heavy, was when price came below, formed a small box, could not hold, and bounced higher all pullbacks there were very, very nice short term. And then right here, that was NFP, came right into 1307.60 and boom, launched and never came back. So that was how the whole thing kind of unfolded, and now we've been much, much higher since then. So again, I think this is the inverse of crude oil, where pullbacks will be bought in this one until proven otherwise. I think 1333 could be a great zone to watch. But any failure to hold above 1330 here could be significant short term. It could push this thing back toward 1325s. I still think right now pullbacks are to be bought until proven otherwise as this thing heads up toward 1360. Lastly, let's take a look at the NQ. Here's the NQ. If we look at this thing in a higher time frame here, here's the weekly pivots on the daily chart. There we go. Right now, very similar to the ES, we're right here in the middle of the range. Not a whole lot to do. Again, we do have some nice strength off these lows, 47.50 as this thing has risen. This early pullback has been defended at the pivot range, and we're still above the previous week's closed. All that right there implies further strength, at least short term. So we could see this thing push higher toward 48.20 for a big time retest. Now, very similar to the ES, anytime we get above this resistance here, we've seen this thing rotate lower. So if there's any failure to see an acceptance above 48.20, that could be a sign that we're headed back toward 47.60. Eventually, we should see some nice expansion from this range. The whole flow has been to the upside lately, but expansion in either direction could spark a nice move. All right, on an intraday basis, let's drop this to the intraday. On an intraday basis, you can see kind of the early area of support that has developed. That's about 47.80, 47.85. That little zone right there has been well bid ever since price went and saw a push through that area Friday morning. So coming back into it was defended Friday afternoon, and again now here Tuesday morning being defended. So this could be an area to continue to watch for support, and above 48.05 opens the door to 48.20. But again, that's going to be the key level to watch intraday. All right, that's it for now. Let's see how this thing plays out heading into the new week of trading. Good luck, trade well, and I'll see you soon.